First-time buyers are screwed.
Hi guys, I could really use your help. I'm trying to save up and move out by the time I'm 30. My money is all over the place. My friends on social media are all buying their first houses. I feel so far away.
Since 2002, there's been a decrease in the total amount of owner-occupier mortgages that are still outstanding. This is partially due to the fact that older generations with higher incomes are transitioning from mortgaged residences to outright ownership. Particularly noteworthy is the fact that there's been a decrease in the number of first-time purchasers who have been able to move up the financial ladder. According to a survey by UK Finance, the number of first-time buyers who obtained mortgages experienced a decrease of 22.4% in 2023 when compared to the previous calendar year. There was a glimmer of hope, or perhaps some optimism, that rising interest rates would lead to a large decline in housing prices, which would lead to an improvement in the ability to climb on the ladder. It should come as no surprise that the increase in rates have made it much more difficult. When it comes to acquiring your first house, there are significant obstacles that you'll need to overcome. In addition to the difficulty of accumulating the deposit, there is also the problem of being able to afford the mortgage installments themselves, which are now substantially greater than they were in the past. This article provides an in-depth analysis of the difficulties that first-time buyers encounter, which are described in detail. A few of the conclusions in the research, as well as the recommendations it offers for resolving the issue, are something I would want to examine. I thought it was fairly humorous that they included a photo of some avocado toast on page 6 of the book. Despite the fact that the report makes an effort to explain difficulties to older generations, who are often homeowners, it is nevertheless possible to receive replies along the lines of, "Rates were higher in my day, you just need to save or eat less avocado on toast." That seems to be a bit of a stereotypical statement. As an example, I'm aware of a large number of elderly people who are aware of the challenges that young customers face. If, on the other hand, you are not convinced, this article does a pretty excellent job of explaining what the process of purchasing a home is like today in comparison to, for example, the past, which may be the most expensive it's ever been in at least the past 7 decades. In other words, how much does it cost? As mentioned earlier, there are 2 costs that has been taken into consideration when purchasing a property. The first is the cost of the purchase, which includes the deposit as well as any other expense such as legal fees charged by your solicitor. The second is the cost of maintaining the home itself. One of the most significant expenses would be the cost of the mortgage. Since 1974, the combination of these expenses has been subject to fluctuations, and there have been instances in which purchasers have found it very reasonable. This is in contrast to the average here in the 1980s and then here in the mid-1990s, where both lines dip below zero. Deposit requirements, as well as payback restrictions, are extremely high in today's marketplace, at the same relative levels as they were before the financial crisis. Repayment costs have reached outrageously high rates, while the cost of a deposit has reached similar high levels. Now, the typical deposit for a first-time buyer is £60,000, from a low of £27,000 in the northeast to a high of £144,000 in London. You can see why the capacity to save that amount is really out of reach for most people, especially if they do not have the support of their family or 2 people who earn a significant income. On the other hand, there is a fascinating debate going on here about how the current housing market compares to the housing markets available to prior generations. There have been times in the past where interest rates have been substantially higher than they are today. For instance, in the 1990s and the 1980s, rates were significantly higher than they are today. In today's market, one of the most common responses they provide is, "Well, when I bought my house, interest rates were 12%. Regarding this topic, the paper makes the observation that comparing the affordability of housing between generations is fraught with peril. To be fair, the word danger is definitely a little too strong, don't you think? However, the manner in which we purchase homes, whether it be an interest-only mortgage or repayment mortgage, shifts with time. In addition to the fact that a significant proportion of the younger population now possesses a degree, there is also the reality that they are responsible for repaying student loans in addition to the costs of housing, which makes any affordability issues even more difficult to manage. What about the absurdity of the fact that women have not been able to open their own bank accounts in the recently surviving people, in spite of the fact that these kind of things make direct comparisons somewhat challenging? This chart makes an effort to do so, and it creates a really clear picture, albeit a somewhat clear picture. It's not clear at all, is it? Simply put, what the hell is going on in this situation? The idea is that interest rates are not sufficient on their own to serve as a comparison. Another factor to consider is the size of the loan in relation to the borrower's income. The fact that 12% of 2 is equivalent to 6% of 4 is a relevant example that can be used to illustrate this problem. Therefore, it's clear that the 2 income multiplier, which measures the amount of debt a person carries in comparison to their income, was substantially lower in the past, despite the fact that interest rates were significantly higher. That is to say, as you can see from the blue line here, the recent rate increases mean that homeowners today who are exposed to rapid rate increases, or even first-time buyers who are looking to get on the ladder, are seeing the same or similar proportions of income go out the door on housing as they did at other points in time when rates were much higher. The challenges that come with being a homeowner in today's world should not be dismissed with the simple statement, "Oh well, you shouldn't have bought a house you couldn't afford, it's your own fault." I hope you've enjoyed this video. If you have, please remember to like and subscribe, and as always, I'll see you on the next one.